Hello, it's Brian Resney. It's question and answer day. And one of the questions that continuously comes up is about the next market correction, and really is the stock market overvalued, which is kind of a combination of the same thing. So ultimately, I will say this. There's parts of the overall equity market that are overvalued, but not a lot of it. And statistically speaking, if I look at the equity market, the bond market, real estate, gold, oil, any asset category, there's always pockets of overvaluation and pockets of undervaluation. I've been managing money for over 30 years, folks. And what I often see is people hear a lot of headline type news on these news services, which are really a lot of hype. They make decisions off that hype on their portfolio, which is detrimental in our opinion. So real research is obviously vitally important. While there are pockets of froth and overvaluation in the equity market, we ultimately see greener pastures the next 3 to 5 years. We're going to have some bouts of volatility, which are normal. And I will say this, the clients this year that are coming in, new clients that are coming to Resney Wealth Management, again, continue to come from the big brokerage houses, banks, insurance companies, and a lot of people that try to do it themselves and really realized it's a tough job and they weren't doing that great. So again, if you've got $1 million portfolio or greater and you're not happy with what's going on in your current relationship, call my firm for a consultation and let's discuss our services and how we can help you get to the right level where you need to be. But again, it goes back to research, keeping the emotional opinions out of the portfolio decision, and being invested in areas that can truly grow. As I've discussed with our clients and on other updates, the U.S. marketplace currently, in our opinion, is the best place to be invested. I continue to hear from people or have new clients come in that come from these brokerage houses and banks that continue to have money invested in Europe. Europe is a crummy place to be invested. It has been the last decade. In our opinion, the next decade's not going to be any better, probably worse. Their economies are not going to do great after the pandemic. They're going to have slow growth and less growth than they did the decade before, in our opinion. So if you have money invested in overseas investments, it's time to sell those, move on to greener pastures, do your research, look for areas of growth. And in our opinion, the U.S. marketplace currently is probably one of the best opportunities to grow a portfolio. That may change. And I've talked to our clients also about this, which is the emerging market economies, which we are currently not in, are areas we are looking and revisiting maybe shortly to add back some of that into our portfolio selectively. So again, make sure you're doing your research, make sure you've got an investment strategy, make sure the firm you utilize is a fee-only fiduciary money manager, and if it's not, call my firm, The Manager Wealth, because real money management and real advice is vitally important to your financial security and the growth of your portfolio. Have a safe and profitable day.